having a good morning. As promised, Deepan Mehta, Director at Elixir Equities, joins us on the show. Hi, Deepan. We're going to be hearing out from the management of Wipro in just a bit. But let's discuss the stock. The numbers are a little bit weakish. The guidance is even weaker. The stock, though, has pulled back quite a bit from the recent top. What's your view on Wipro?
Good morning, Nigel, and thank you for having me on your show. The view on Wipro is certainly negative. I think if you see there's a lot of stagnancy in the earnings of Wipro and other large cap software services companies. So even at these levels, it's better for investors to get out of Wipro, go into some growth stocks. I think, that's where the returns can be higher. And you could have a trading rally in Wipro because valuations on historical comparison basis are more attractive. They're certainly cheaper. But generally, when there is no growth, you will not see sustained outperformance. So I would give Wipro a pass, and existing investors should look at lightening up their positions over there.
Okay, so give Wipro a pass, and maybe you'd want to consider lightening up some of the positions. I think we will be playing out the commentary from the Wipro management in just a bit. But just to recap the numbers, the problem is growth. It's really top line. On margins, actually, Wipro has done very well. Margins have been slightly above estimates at 17.5%. But top line, not only have they've missed estimates for this quarter, Q4, but what they're talking about the future, transformational deals, discretionary spends, they will be impacted. One of their transformational deals got put on hold in Q4, which is why that top line number was looking quite weak.
I want to make 2 points. Infy reports today after market hours. So that is that. And second, did you guys see the United Airlines guidance last night in the US? They put a guidance so wide. One is a normal economy guidance, the other is a recession guidance.
Oh, wow.
Poles apart.
Take your pick.
Okay, welcome back. There's about 15 minutes to go for the pre-open session, and we are going to be looking at how things start to trade. That Wipro conversation, of course, interesting. 40 points lower on the as far as the GIFT Nifty is concerned. Deepan, good morning. The big mover over the last 2 days has been IndusInd Bank. The story essentially was that it got to about 0.65 times price to book. And now there is going to be, as we reported as well, source-based, but there's going to be a lot of change at the top. And some other senior management will be sort of phased out and new fresh blood will be brought in. What's your sense here, Deepan, IndusInd?
See, Prashant, we have seen many stressed out banks in the past, the likes of Bandhan and RBL. And, they were also hit by some controversy or the other, and then the stock price fell and there was change of management over there. But what I've noticed is that although IndusInd Bank is very attractive from a price to book basis, price earning multiple basis, what happens in situations like this when there is uncertainty around top management is the growth rates really suffer extensively. And you can have negative growth rates as we have seen in the IndusInd Bank releases as well. So from that point of view, I just want to just wait and watch as far as IndusInd Bank is concerned. And new CEO or new team, when it takes over, it takes a while for them to really get the engine moving again. And at the same time, I think there are many attractive stocks in the banking space, in the NBFC space. I think I would prefer them over IndusInd Bank. But as a measure of disclosure, we are invested in IndusInd Bank and we remain invested because end of the day, the stock is quite attractive and it's a good brand and a bank which has a very solid platform and distribution network as well. So I would just like to wait and watch maybe 6 months, 1 year down the line, IndusInd Bank maybe an attractive investment opportunity.
Deepan, I wanted to ask you about NBCC. I recall a few years ago, I think you were quite positive on the prospects, and the street as well got very bullish and then they didn't deliver. Now that appears again there is some interest in the stock. Any view on the stock? Yesterday it was up close to 7%, massive volumes, massive delivery at around 95 rupees odd.
Yeah, Nigel, I think we were positive on NBCC, but then the execution never really picked up and numbers never came through. But now I think we can see the company getting into a new growth phase, at least on the execution front. And end of the day, it's a bit of a reality play, I would say, because end of the day, the numbers clearly depend upon how many units, whether it's commercial or real estate or residential, which they're able to sell. But the real concerning factor in NBCC is the quality of the construction. And there have been a lot of complaints over there around that particular aspect. I hope the management has made some improvements over there. But from that perspective, I think long-term looks good. but I think a lot of it's got captured in the stock price. So existing investors will remain invested, but I'm not contemplating a fresh investment.
Okay, one more stock, Z Entertainment, one of the rank underperformers. But at times you say, at this price, something looks okay. And the promoter entity came in there, they bought some, 0.2, 0.3%, I think, just before the end of the quarter, before they go into the cooling period. They have guided for better times in the coming year, with regard to margin improvement. And some argue that valuation-wise, at around 100 rupees, it's okay. It's around 113 rupees. Yesterday, there was another stock that popped up. Interested or just stay away?
No, I think you can keep it on your radar and see if there are actual perceptible improvements in the performance, the margins, and especially ZEE5, how that is shaping up. But look, it's an industry where there is intense competition and still disruption is underway. Habits are changing. Advertising revenues are under stress. Subscription revenues are under stress. They are facing a lot of pressure even in the global markets, overseas markets as well. So I mean, I keep it on my watch list, but just because it is cheap, I'm not running in, and investors shouldn't run in to buy the stock.
Got that. We'll take a quick commercial break here, Deepan. Stay with us. A couple of pharma names I wanted to check with you as well. Zydus, for example, fell sharply. Lupin was down as well. We'll also get you technical ideas. Mitesh and Sudarshan waiting on the other side. Stay tuned. Thank you very much, both of you, Mitesh and Sudarshan, with perspective on those names. Deepan, I was earlier talking about the pharma names, Zydus, which fell sharply, about 7%. There was Lupin. Both companies launched this at-risk drug, which the courts ruled, the ruling is adverse, and this was substantial, about some $25 to $35 million in quarterly revenues is what was expected. Any thoughts? What's your take overall on this space?
See, Prashant, I think these are the risks which are always there in investing in pharma companies, and that along with US FDA inspections does cause a lot of volatility in the stock. But then eventually they overcome it as well because underlying trends of the industry are positive, and at least until these Trump tariffs, we were seeing secular improvement in pricing and a lot of new molecules also going off patent, providing opportunities to these companies, and globally also they were expanding their footprint. But this Trump tariffs have put a question mark on the prospects of the pharma industry, and how much is the tariff on what type of drugs it will come, very difficult to say. But it's a big industry, and I think that the best place in the pharma industry to be in would be the CDMO players, the likes of, say, Divi's Laboratories, Suven, Blue Jet, these companies, maybe even a Syngene, OneSource. I think that's where we are focusing our research in the pharma industry. And that's one segment within the pharma industry which may not get that impacted by Trump tariffs as well, given the nature of the business model. And they really benefit from the kind of tariffs which are there on China and other such regulations which are underway in the US as well. So very positive on the CDMO space. They're very expensive, but the results will surprise us on the upside.
Okay, all right. Deepan, I wanted to ask you about these EMS players. Companies like Dixon, they're up close to around 15% or thereabouts. And over the weekend, these companies were in focus because US, they import roughly around $250 million of, smartphones, computing devices as well. And out of that, China accounts for close to around 30%, while India accounts for only 5%. So there was that hope that some of these EMS players, they have a bigger opportunity. What's your view on some of these EMS stocks and which one do you prefer?
See, Nigel, the likes of Dixon are really very expensive, although surprisingly the growth also is very strong, no doubt about it. But, buying a stock for 100p plus always is a bit of a risk factor over there. Other EMS manufacturers, I think gradually the valuations are getting more in the zone where it is comfortable. I particularly liked the numbers which came through from Syrma SGS for the September quarter. Good earnings visibility, September and December quarter. Good earning visibility. I think March quarter also be pretty decent. And valuations which were extremely rich at some point of time now, because earnings have caught up and stock has corrected, are in that reasonable zone. So I would say that from a fresh investment perspective, that looks interesting. But existing investors in EMS companies should remain invested because end of the day, the growth is fabulous. Just because the stock is expensive, I wouldn't look at exiting it.
Deepan, just two other names. We spoke about IndusInd, of course. There are deals brewing in two other specific names. One is, we'll probably get the announcement soon, IDFC First Bank. I don't know if you have any thoughts specifically on that name. The other one, as Nimesh has been telling us, and now, of course, there's an exchange notice as well, 360 ONE, which is the wealth management business, where, what we understand is there could be a strategic player who comes in, takes a position. Any thoughts here, Deepan?
First, a disclosure, we are invested in both these companies and very positive on the prospects of IDFC First as well as 360. And especially wealth managers, I think, have a very great future. And you should intend to hold these companies for 5, 7, 10 years or so. And these companies can really turn out to be great outperformers, considering the kind of dynamics which are under play over here and the opportunity available for such companies. Also very positive on IDFC First Bank, amongst the top 2-3 fastest growing banks, pretty well managed as well. But for some reason or the other, it has underperformed, at least our expectation. But now that the climate has improved for the banks, the overall industry trends have improved, I think IDFC First should start to deliver very good returns going forward. So positive on both these companies, but as I said, we are invested in them, so our views could be a bit biased on the positive side.
Point taken. Right on cue, Deepan, stay with us. That news has come. Board has approved fundraise of up to 7,500 crores from two separate investors. That's a very large fundraise from IDFC First Bank. News hitting the exchanges, and we have the sort of details at the bottom of the screen. And we'll put out more in terms of who the two players are, the two investors are who are coming into IDFC First and putting this money in. In the pre-open, stocks high, but I think it should start to react. This is still very early days, within the first minute or so.
Anyway, we will get to know only by end of today, I think. Results are today, right? I think the results today or tomorrow. The results are like round the corner. But is the expectation, do you have any fears of asset quality at all?
No, but you have to keep an eye out for asset quality on all of these companies, So I don't think it's so much of a concern. And the overall cycle also seems to be improving in the sense that the base effect will start turning favorable when it comes to NPA provisioning, because last few quarters we have seen 50, 60, 100% jump in NPA. I don't think that will happen going forward. And then the core profitability, the core operating profit margins a lot of it will percolate to the bottom line. So that's going to be the theme for all the banks in the March quarter, according to me.
Got that. So we'll come back to the IDFC First Bank story, and hopefully Mr. Vaidyanathan, the top boss at IDFC First, also will be joining us.